In today's analysis, we're covering insights from the latest research report by J.P. Morgan, where the firm's analysts hold the view that this as a healthy correction rather than a turning point, presenting a buying opportunity in metals, while anticipating further selling in energy. Prices for everything from gold and silver to copper and Bitcoin plunged last Friday in the most significant bout of market turbulence since November. Gold experienced its steepest one-day drop since 1983, falling more than 9%, while silver plummeted by 26%, the largest daily decline on record. Overall, commodities lost nearly 8% over a brutal three-day rout, led by a 57% collapse in U.S. natural gas prices, a 33% drop in silver, a 13% decline in gold, and a 7% loss in both copper and oil. The whiplash continued through midweek, with prices rebounding and then selling off again amid volatile trading, figures 1 and 2. Indeed, as gold remains a dynamic, multifaceted portfolio hedge with a clean structural story, J.P. Morgan analysts have already seen physical dip buyers emerge. On top of this retail investor support in the near term, they continue to expect central banks will remain steadfast and important dip buyers too, as they now forecast net official buying this year to amount to 800 tons of gold, still 70% higher than pre-2022 levels. Figure 7. Overall, they continue to see a gold diversification trend that has further to run amid a still well-entrenched regime of real asset outperformance versus paper assets, and they now forecast enough demand from central banks and investors this year to ultimately push gold prices to $6,300 per ounce by year-end 2026, figure 8. More apprehensive on silver as risk of overcorrection runs both ways in near term. In silver, a smaller and more volatile market than gold, that also lacks central banks as structural dip buyers, they are more apprehensive of a potentially deeper shakeout in the near term. While current weaker fundamentals didn't justify the surge higher, they still think there remains significant potential for an intensifying dislocation in copper markets and more bullish fireworks in the months ahead, figure 9. However, it should be noted that the views in the research report are for investment reference only. Market conditions are complex and volatile, and investment decisions should be made in light of your own risk tolerance.